Hi, everybody, and welcome. We'll get started in just about a minute as we wait for some others to join us. Thank you for being here on a Saturday. And if you'd like to, you can see the Q&A box there. You can type your name and where you're joining us from in the question and answer pod. Thank you. Looks like we have folks joining us from across the country. And again, we'll wait about another minute as people join. Thanks for being right on time on this Saturday afternoon or morning, depending upon where you are. So nice to see so many people here with us. Great. Okay, we'll go ahead and get started. The webinar today is Help is on the Way, Supporting Family Child Care to Prepare for Child Care Stabilization Grants. My name's Patty Ryan. I am with the National Center on Early Childhood Quality Assurance. Our center is a national TA center that's jointly funded by the Office of Child Care, the Office of Head Start, and Health Resources and Services Administration. We support the work of state, territories, and tribes in promoting healthy, safe, and high-quality environments for children, and are really proud to support efforts of people like you here on this call. I do want to say, and we'll remind you throughout the webinar, that the information presented today will be available in the coming days. We'll send a follow-up to all of the participants on the webinar today, and you'll have also access. We'll give you links where you can find the information that we're referring to during the webinar. And now I'll turn it over to my colleague, Violetta, who will give you some technical tips so you can enjoy the webinar.
Thanks, Patty. Hello and welcome. Before we get started, I want to go over a few things for today's webcast. One, the webcast is being recorded. Like Patty said, there is a Q&A panel available for you to enter questions for the presenters and to enter any technical assistance questions that you may have for our tech support team to respond. For the best audio and visual experience, we recommend that you confirm you have a strong internet connection. The audio is going to come through your computer, so make sure that the volume on your computer speakers is up and that your computer speakers are on. If you have other pages opened, other windows, we recommend that you close them to conserve your bandwidth. If you're connected to VPN, please disconnect. If you at one point lose audio or your screen freezes, the slides are not moving, we recommend that you refresh your browser. We also recommend that you use the preferred browsers, which is Edge, Firefox, and Chrome. As you can see, live closed captioning have been enabled for this call. To turn them on, you're gonna just click on the attend on the Wheatley panel, and then the closed captioning should appear. If you want the closed captioning read out loud, you can click on the unmute button, and the Wheatley will read the closed captioning for you. But I just want to please point out that if you do this, there's going to be overlap with the speaker's voice and the Wheatley panel reading the presentation to you. Of course, if you want to hide the Worldly panel, you can click on the Worldly icon. It's like a globe icon, and that'll hide it for you. Or you can also just X on the panel and that should disappear. We also have polls today throughout our webcast. And to respond to a poll, you'll simply see it come up on your screen, and then you just select a radio button for the response that fits, for the response that best for you. And that's all. And I believe that's everything, Patty. I'm going to send it back to you.
Great. Thanks, Violetta. And if you have any difficulty at all throughout the webinar, please go ahead and just type in the question and the answer box, and Violetta is standing by to help you. And we are so fortunate now to have the Deputy Director of the Office of Child Care, Dr. Ellen Wheatley, here with us today to say a few words before we get started. Ellen?
Thank you, Patty. It's a great pleasure to be here, and I'm very happy to welcome hundreds of family child care providers, some of the most important people in America. At OCC, we realize the work you do is critical to our children, our families, and our communities. It's an exciting moment in America right now regarding child care. For the first time in decades, when I say child care is the engine that runs the economy, nobody laughs. Finally, people understand how very important we are for this generation of parents who are working, providers who are working, and the children of the next generation who will be those who are working, and we're preparing them to do so. In response to the urgent needs you may be facing as a result of the COVID-19 public health emergency, we want you to know that help is on the way. The American Rescue Plan Act was signed March 11th, 2021, and includes approximately $24 billion. And that was billion with a B. It kind of knocked me over the first time I heard it. For child care stabilization grants, and $15 billion in supplemental child care and development fund monies. This represents the single largest investment in child care in our nation's history. Today, you have the wonderful opportunity to learn about the stabilization grants and how to be prepared when they're made available by your state, territory, or tribe. We know family child care providers have been hit hard by this pandemic. As a small business owner, you're faced with challenges and may be struggling to continue to provide these essential services. You faced decreasing revenues due to lower enrollment, while also shouldering higher expenses, up to 47% higher by one estimate, for personal protective equipment, sanitation, additional staff, and other needs to operate safely. We know that about 1 in 4 child care providers open at the start of the pandemic are now closed. And those of you who have stayed open have gone to enormous lengths to do so, and we thank you. 2 in 5 providers reported taking on debt for their programs using personal credit cards to pay for the increased costs, and 3 in 5 work in programs that have reduced expenses and through layoffs, furloughs, or pay cuts. In 1 in 6 child care jobs, generally held by women of color, still have not come back. And that's much more than the 1 in 20 jobs that have been lost throughout the economy. By offering much needed immediate economic relief to family child care providers like you, the funding aims to help you with some of the impacts caused by the pandemic. Providers can spend the stabilization grant funds on a variety of key operating expenses, including wages and benefits, rent and utilities, cleaning and sanitation supplies and services, and other goods and services necessary to maintain or to resume your child care services. Your state, territory, or tribe is currently working to make grants and applications available to child care programs. At the Office of Child Care, we want you to be prepared when the grant applications become available. Today, you will hear about how to find out more about those grants, how to access tools and resources to support your application when the funding becomes available. On behalf of the Office of Child Care, thank you for being here, and thank you for the very important work that you do. I know that you will really enjoy the webinar and that we will really look forward to you getting the support that you need when those applications become available. Patty, I'm going to pass it back to you.
Thank you so much, Ellen. We're fortunate to have such a friend for family child care. If we could just very quickly, Violetta has put the poll up on the screen that you see. If you just click on the poll and let us know which role fits what you do best. We have hundreds of folks on the phone today. We'd like to know how many of you are family child care providers, maybe assist in a family child care home. Do you work in another type of child care program? And we'll give you just a minute to do that. Again, you should see the poll on your screen. Just click next to the one that best describes your role. Awesome. Great. It looks like the majority of you are family child care providers. That's great, and welcome. And again, thank you for being here on a Saturday afternoon or morning. To let you know a little bit about what we're going to talk about today, we've already done the welcome. We're going to give you a little bit of information about the stabilization grants that Ellen spoke of. And then we're so fortunate to have Tom Copeland here to speak with you, to talk to you a little bit about what the grants are all about, how you might use them to best fit the needs of your program. We will talk about where to learn more about how to apply. Tom also has some information about tax implications of stabilization grants and other grants, and we'll talk about some records that you may want to keep. Again, keep in mind that only a small number of grants have been released so far in a small number of states, territories, and tribes. The purpose of the webinar today is to really get you prepared, to make you aware that stabilization grants are coming and give you the tools you need to successfully apply. And at the end of the webinar, we will share with you resources that you can find. We'll also share our email address. I think somebody can broadcast that to the audience, the email of the center, so that if you have any questions after the webinar, all you have to do is ask. I'd like to move to a graphic that helps highlight some of the investments that Ellen was talking about. Again, we're experiencing something extremely exciting and wonderful in the child care sphere, and we want to make sure that family child care providers are armed and have the tools they need to be able to take advantage. There were three primary pieces of legislation passed to provide relief from the impacts of the pandemic. The first you'll see on the right-hand side as you're looking at the screen is the Coronavirus Response and Economic Security Act, or CARES Act. That was enacted in March of 2020. And then in the middle, you'll see the Coronavirus Response and Relief Supplemental Appropriations Act. That was enacted in December of 2020. So we share these with you because you may have been a recipient of grants or resources made possible as a result of CARES or CURSA funding. But as Ellen mentioned, there was other significant legislation passed, and that you'll see on the right-hand side. And what we'll be talking about today, it's stabilization grants. Those are made available through the American Rescue Plan Act, which is the latest of the coronavirus relief funds specifically for childcare. $39 billion, as Ellen said, that with a B, were allocated for childcare. And 24 billion of those are specifically allocated for child care stabilization grants. And as family child care providers, you served really on the front lines day in and day out throughout the pandemic. And many of you face significant burdens and challenges. The ARP stabilization grants that will be coming to your state, territory, or tribe are designed specifically to address the financial burdens faced by family child care and other child care programs during COVID-19 and address the instability of the child care market as a whole. And again, it's important to note that you may have been the recipient or even still are the recipient of other grants and funds that have made available to help support relief but the stabilization grants are additional funds that will be coming to your state, territory, or tribe, designed specifically to help relieve the burden that you might be feeling as a result of the pandemic. Only a handful of states have released their applications so far. That doesn't mean if your state, territory, or tribe hasn't released their application that they're behind. All states, territories, and tribes are working diligently and intentionally to make the applications available so that you can access these important funds. And again, the idea today is to raise your awareness of the stabilization grant funds and give you information and tools that will help you be successful in your application. Tom Copeland will be speaking and is providing a general overview of the federal guidance that states, territories, and tribes are getting. And it's important to know that once your application, the application where you live, is released, to read it carefully because the states, territories, and tribes have leeway and flexibility in terms of both how they're funding, what they're funding, and who they're funding. So again, make sure that you're aware of these grants and that as soon as they become available, you read it and you get the help that you need if you need help, and that you apply for the funds. At the end of the webinar, again, we'll share with you resources and information, and we'll share with you where to go to find out when the stabilization grants in your area have been released. And so we will be responding to questions throughout the webinar in the Q&A pod that as we can. We may not be able to get all of the questions. We have a large number of folks on the phone today. If we don't get to all of them, I know that Tom will make information available on his website. We'll show you where to go to get additional information. And again, our email will be provided. So I'd like to introduce Tom Copeland, who is our featured presenter. And we're so fortunate to have Tom today. And he is a true champion again and friend for family child care, and Heidi Hegelbraid with First Children's Finance. One thing I forgot before I turn it over to Tom and Heidi is the question we get asked a lot: when can we expect the grant applications in our state, territory, or tribe? States, again, have leeway in terms of when they can make the grant funding available. State, territories, tribes have until September 30th, 2022 to obligate the funds, and September 30th, 2023 to liquidate the funds. So it may be within the next week, within the next month, it may be the fall, it may be later, but keep in mind that states, territories, and tribes are working just as hard as they can and being very planful to get these much needed resources out to the field. So with that, I'll turn it over to Heidi and Tom.
Hi, everyone. I'm going to start by introducing myself, and then I know you're all here to hear Tom, so we're going to let him get rolling here in just a moment. My name is Heidi Hegelbraid. I'm the Chief Program Officer at First Children's Finance. We are a national nonprofit organization who serves family childcare centers, communities, states, territories, and tribes. We have offices in the upper Midwest, and we have relationships and engagements with over 20 states. I am just going to offer a few words before I pass it off to Tom, and that is just to reinforce the thing that you have heard a couple times already. I want to just emphasize to you that no state, no territory, and no tribe is behind schedule. And you are going to experience a lot of reminders of this throughout our day together today. But this is a really important time period for family childcare businesses, entrepreneurs like yourself, to get ready for the applications. You're going to have lots of questions. Tom's going to give you all kinds of great information, but don't panic. You are not behind schedule, and your state, your tribe, and your territory are not behind a schedule if the applications are not available in your state currently. There is a lot of moving parts, and we're trying to get out ahead of the application processes being available, giving you the information that you'll have so that you can be ready for those applications when they come. I am going to be the Vanna White to Tom Copeland today. And so as you ask questions in your chat, I'm going to maybe interrupt every once in a while and ask Tom to respond to them live as we go. And there may be a couple of questions that I'll answer along the way too. But I'm so glad to have you here with us today. And I'm so excited to now turn it over to Tom.
Thanks, Heidi. Whoops. All right, here I am. Welcome. I'm Tom Copeland. I'm coming to you from my home office in St. Paul, Minnesota, where it's cloudy and raining right now. I'm an attorney, trainer, author, have been working on the business side of family childcare for many, many years, trying to help people be more successful as a business. And I do that as a private consultant. If you have questions after today about what we're talking about, or questions about other aspects of your business, I'm happy to try to answer them. Here is my email address. I don't charge anything for answering questions, so I'm happy to try to do that. I have a website where I've posted hundreds of articles on all aspects of the business side of family childcare. Your general questions might be answered there. I'm also on Facebook. Whenever I post an article on my website, it will appear on my Facebook page, and you can ask me questions on Facebook. I am not preparing your taxes. I'm not providing you with individual professional advice. So, as we've been talking about, post questions now in the Q&A box, and we'll try to pick up and answer as many of those as we can. I'm assuming I won't be able to answer every single question that comes up. Therefore, I'm planning on doing a follow-up article where I post all the questions and answers, and we'll post that on my website. We'll also provide a link to the recording of this webinar. That will take a few days before you'll see that appear on my website. You can also get a copy of this PowerPoint presentation as well on that same article. So, as you've heard already, ton of new money, 24 billion bucks coming in form of grants to both homes and centers. If you want to know how much money your state is getting through these stabilization grants, here's a link that will tell you, and it's millions of dollars for most states, for many states, I should say. And again, these grants are in addition to any previous grant you've already received from your state. And as we're talking going forward, I want to use the word state to incorporate territories and tribes. What's the difference between a grant and a loan? What we're talking about now are grants. You don't have to pay them back. It's money that's yours. You don't have to pay it back. It is not a loan. Now, many providers may have gotten some money through the SBA, Small Business Administration, through a Paycheck Protection Program, through the Economic Injury Disaster Loan Program. In those cases, those were forgivable loans, which you didn't have to pay back. There's another program, an EIDL loan, that you would have to pay back, all right? But whether you got one or all of these SBA program, they're separate from what we're talking about today. These stabilization grants have nothing to do with the SBA program. You could have received the Paycheck Protection, the EIDL money. You're still entitled to get these stabilization grants. As you already heard, each state has a lot of leeway into how to spend the money. And I think I skipped forward one slide, sorry. So who's eligible to get these grants? According to the guidance, if you're licensed, registered, or legally exempt, you are eligible. However, your state may clarify this. Somebody asked a question about, well, is this money only going for providers who care for subsidized kids? Probably not. Probably not. But again, each state, will say this again and again, your state has a lot of leeway, and so they may set different rules about who exactly is going to get money in their state. So, in general, what can you use this money for? Paying yourself, general operating expenses, wages and benefits if you have employees, rent, utilities, cleaning, sanitation supplies and services, other goods and services necessary to maintain or resume child care services. So as you can see, these are kind of general categories. General operating expenses, other goods and services. Your state may clarify that, say this is what we mean by that very specifically, or not. They may just say you could use this money for general operating expenses. And they may or may not clarify that. What about paying yourself? And this is where I think there is going to be a lot of confusion. Grant applications may use words such as wages and benefits, personnel costs, salary, compensation, premium or hazard pay, staff bonuses. What does this mean as a family child care provider? And right now, I'm talking about if you're self-employed, you're not a corporation. If you're a corporation, you are actually paying yourself. The corporation is paying you, all right? But as a self-employed person, you aren't writing checks to yourself, pre-pandemic. You didn't write checks to yourself because all the money you took in from parents or food program or subsidy, it was yours. And you could do whatever you want with it. So people aren't comfortable with the expression paying yourself. But that could come up in these grant applications, or this other language could come up. The clear intent of this money is to provide family child care providers with the opportunity to take some of this grant money for themselves. Essentially, I don't know how to explain it, reimbursing you for the work you've done, paying you for the work you are doing. All right? So how are you going to show that to the state? How are you going to account for that with the state? Again, we don't know. Each state could decide how to do that. The state might say, you need to write a check to yourself or transfer money from one bank account to another bank account, and that will show that you paid yourself. But in most cases, you'll be able to, well, in all cases, you'll be able to use some of the money or maybe all of the money to pay yourself. Questions come up about the 1099 form. When you get money under this grant, your state may or may not issue a form at the end of the year called a Form 1099, which is a form that says this is how much you got and you need to report it as income. And they're going to send that form on to the IRS so the IRS knows you got this money. Will the state issue a 1099? Maybe. I wish I could give you a clear answer to that. We don't know. But it doesn't matter whether they give you a 1099 or not. You still have to follow the rules that I'm just about to explain. Employees. You can use the money for employees. Now, employees are defined as those people that you treated as proper employees, meaning you withheld federal and state payroll taxes, Social Security, Medicare, unemployment taxes. You followed the proper payroll tax rules for employees. Therefore, if you have independent contractors or you just issued Form 1099 to people and you didn't follow the payroll tax rules, you didn't withhold and pay Social Security, Medicare taxes, those people are not employees for purposes of this grant. And the grant application says you can't lay off employees, but you can lay off independent contractors or people that you didn't properly treat as employees. We've heard this before. We're going to say it again. States have flexibility. We can't answer some questions about your particular state because you're just going to have to wait to see what your state is going to say about this. So, states are going to allow you to pay use some of this money to pay yourself. Once you've paid yourself, then the money is yours, and now you can use that money for whatever you want. You can buy business stuff with it. You can buy personal stuff with it. You can go to Hawaii. You can send money to me. You can do whatever you want after you've paid yourself. And once you've paid yourself, you're not subject to the rules of the grant on how you must use the money. And once you pay yourself, that does not change the tax consequence. Well, let me take that back. Let me pause on that, and I'll get into that in a minute. Some states may require you to use some of the money for employees. And some states may require you to use money in certain ways and not in other ways. Some states may target grants to providers who provide infant care, providers who provide care for special needs children. Or some states just might say, we're giving a certain amount of money to everybody. The states also have flexibility for you to be able to use some of this grant money for expenses you incurred before you apply for the grant. Again, the states will tell you, well, you can go back so far and count expenses back to this point. All right. What can the grants not be used for? Well, it's pretty narrow. You can't use this money for construction, all right, adding a room, building a garage, or major renovations. The states may or may not define more specifically what major renovations mean. It could mean fences, patios, decks, kitchen, or basement remodeling. That to me sounds like major renovations, but states might say a fence is okay. We just, again, have to pay attention to your particular application. Maintenance and minor renovations are allowable. So, what does that mean? Well, repairs, painting, wallpapering, fixing rotted out boards on your deck. To me, that's maintenance. Getting your furnace clean, that's maintenance. Minor renovations, replacing a medicine cabinet in your bathroom. Plumbing, have some plumbing repairs done. Again, we need the state to tell us what is allowed and what is not. What else? You can get this money even if you're currently caring for subsidized kids. So this is in addition to that. You're on the food program. Okay, great. This is in addition to that. This is in addition to the SBA programs that I've already talked about. Now, if you're currently receiving unemployment benefits, receiving this money may or may not impact your eligibility to continue to receive unemployment benefits. Some states will say, hey, this grant is income, but it may only be considered income for the week you get it. And therefore, after that, you can get back on unemployment. I can't answer what your state would do because every state is all over the place about this. And so what I would suggest you do, if you are on unemployment or you're about to apply for unemployment, that you try to find out by looking at your state unemployment website or trying to get through to somebody from the unemployment office, good luck, and try to find out what would it mean if you got a bunch of money from a grant under this program. Should you apply for this grant? Yes, in almost every situation. The only times I can think about where you might want to hesitate, well, maybe I shouldn't take this grant, would be that you're receiving health insurance tax credits because your family is low income. And by getting this grant, this could kick you off and no longer be eligible for health insurance tax credits. Or you got a child who's in college, about to go to college, and you're concerned that this grant may count towards your assets and therefore your child may no longer be eligible for some college scholarships or get less of a scholarship. Okay, I can't tell you if that would be true in your situation, and depending on how much the grant might be, that might have an impact. But I would take a look at it closely to see what the trade-off is. With those two exceptions, those are the only two I can think of right now, you're always going to be financially better off getting these grants. It's not a loan. You don't have to pay it back. It's yours. So when your state opens up applications, and as we've already heard, it could happen next week, next month, 6 months or more from now. We just don't know. When it becomes available, you want to apply. You want to get in there and say, yes, I want this money. Now, Before I move on and talk about the tax issues, which is a key part of this discussion, I want to see if I can answer some questions that I haven't been paying attention to. So Heidi, are there questions here?
Yes, Tom, there are a couple questions I'd like you to think about. A lot of questions about taxes. And one of the questions that an entrepreneur asked is, will they be taxed twice? So will the business be taxed? And then if they write themselves a check, will they then be taxed a second time?
No. As we're going to talk about here now, the money from a grant is always considered taxable income. However, if you took all the money for yourself, you're not going to pay tax again. It's taxed just once.
Other questions about taxes. And so I'm wondering maybe, Tom, if you could just do a little bit of a deeper dive and maybe repeat just again a couple of things about taxes. I heard you say them, but I think questions are still coming in, lots of them about taxes. If you could just retouch your high points on taxes.
Well, retouch. Now, I'm just about to go into this in detail, so I'm going to go into some detail.
Let's do that.
Then we'll come back, because I'm sure there'll be a lot of questions.
There's lots of questions about that.
So we start with the general concept. When you get a grant, it's taxable income. That's where we got to start. It's taxable on your federal tax return. Your state may or may not say that this grant money is taxable income. Your state, in general, it is taxable income. If your state says, we've passed a law that says it's not taxable on your state tax return, terrific. And your state may take a while before they get around to thinking about this, and so it may not be for many months that we find out whether or not it's taxable on your state tax return. All right, so as a general concept, you're paying taxes on a grant. And you're paying taxes because this is business income. You're going to pay around roughly 15% Social Security Medicare taxes, 10 to 21%, somewhere in there for most people, federal income tax, depending on your family's taxable income, and state income taxes. Some states don't have state income tax. Others do, and that can range from, 3 to 6 or 7%, somewhere in there. So as a general rule, most people are in a 30 to 40% tax rate on business income, roughly speaking. All right? Okay. Next, we're going to go into 4 examples of what might happen with the money you get and how you use it. First example, you get a $5,000 grant, let's say, and you're going to use all of it to pay yourself. All right? You're going to have to report it as income. If you're in the 30% tax rate, you're going to owe about $1,500 in taxes. If you're in the higher 40% tax rate, you're going to pay about $2,000 in taxes. All right? So $5,000 income minus $1,500 taxes, you're going to have $3,500 left in your pocket in the 30% rate. Or $5,000 minus $2,000 in taxes, you're going to have $3,000 left in your pocket at the higher tax rate. The point of this is, if you use all the grant money to pay yourself, are your taxes going to go up? Yes. Are you going to have more money in your pocket after you pay the taxes? Absolutely. Do you want $5,000 if you're going to have to pay $1,500 taxes on it? I hope you do. I hope you do, because you're going to have more money than before you got the $5,000. A lot of providers get hung up on the idea that they're going to have to pay more in taxes. I don't want my taxes going up. Don't get me involved in some program where my taxes are going up. Well, that's crazy thinking. If you got an additional parent to enroll in your program who's going to pay you $5,000 a year, do you want that additional income? Well, yeah. Your taxes are going to go up with additional income. So let's not be scared of paying more in taxes. Remember that you're always going to have more money in this situation after paying taxes. All right. So that's the first example. Next example. You get $5,000 and you buy items that are used exclusively for your business. No personal use. All right? So food just for the daycare kids. Toys for the daycare kids. Your kids are in college. You have some employees perhaps and you're paying them some wages. You buy supplies related to COVID. You buy children's furniture and equipment. Again, only the daycare kids are using this stuff. All right? What's the tax consequence? You're reporting $5,000 of income. You always have to report whatever you get from these stabilization grants as income on your tax return. Always. In this example, we spent $5,000 on stuff we're only using for business, so we can deduct the full $5,000 on our tax return. So we have zero taxable income. We're not paying any taxes in this example, and we don't have any money left over like we did in the first example because we spent it all. All right? Still a good deal. Example number 3. This is more complicated. You're buying items with the money that's used by your business and by your family. And this could be very common. So, what are you buying? Toys that your children are using. A computer that you're using for business and personal purposes. A television that your family uses also in the evenings. A swing set that your kids are on as well. Just examples. Well, we can only use this grant money on the business portion of these things. So if you're asked in a grant application to list expenses for these kind of items, you can only list the business portion of these expenses. Well, what is the business portion of these expenses? It's what we're calling a time and space percent, which I'm going to explain on the next slide. But for purposes of this example, let's say your time space percentage is 30%. That means that the business portion of these expenses was 30%. All right? So to be able to to be able to use the $5,000 on these shared expenses, you have to have $16,700 of these expenses. Why? 16,700 times 30% is 5,000. All right? So to show 5,000 on your application or on your report that you might have to submit at the end on shared expenses, in this example, you'd have to actually have spent $16,700. Therefore, 5,000 of income, show it as income, minus you're able to deduct the business portion of this 16,000 or 5,010, all right? So that means you got a $10 net expense, no taxes, and no money left over. All right, well, what do we mean by the time space percent? I assume a lot of you know what this is, but let's just be clear. It's a formula that's used to determine how much of these shared expenses you can deduct. It's a formula of time, the number of hours you're using your home for business, divided by the total number of hours in the year. That's a time percent. The space percent, the number of square feet you're using on a regular basis in your home, divided by the total square feet of your home. That's a space percent. And we're multiplying them together to get a time space percent. This information you're entering on an IRS Form 8829, Expenses for Business Use of Your Home, Part 1. Now I should say, this is a formula, time space, is used if you're doing childcare in your home. And if you are self-employed or a limited liability company that is a single person limited liability company. If you're a corporation, then the rules are different and you don't fill out this form. But doing childcare in your home, self-employed, single person LLC, you got to be putting in this information. Let me say a few more words about this. because this is so important. This time-space calculation is the single most important number that you want to calculate that will make the biggest difference in reducing your taxes. So the time percent means how many hours are you caring for children in your home from the moment the first child arrived until the last child left. Whether there's one child in your home or 10, it doesn't matter. When did the first child show up? When did the last child leave? Not when your contract says what your operating hours are. It's when they actually left your house. Now, in addition to these hours when children are there, we can count hours when children are not there doing activities such as cleaning, COVID cleaning, record keeping, time on the internet, time on Zoom meetings, talking to parents on the phone, any other activity that you would not otherwise be doing except for the fact you're in business. Those hours are also included in the time percent. And Heidi, I see you. So what do you got?
I've got a time-space question for you. A couple of folks have asked, what if they were closed last year temporarily? What if they had time periods? Does that change their time-space allocation for this year?
Well, if last year we mean 2020, all right, many providers were closed for a period of time, weeks, months, many months. I wrote an article on my website calculating your time-space percentage for 2020. And I give you an example of being closed in that example for 3 months. When you're closed, you're obviously not caring for children for as many hours, and that will then lower your time percent. However, while you were closed, you may still have been doing business activities in your home, right? You may still have been, maybe you were doing painting or activity preparation, curriculum development, taking a CDA class, and so on. Other activities that were related to being in business that you were doing in your home. And that's what this article talks about. We want to capture those hours because that can help replace some of those lost hours when kids were not there. For 2021, it's the same answer. If you were closed for a period of time earlier this year, okay, but that makes it even more important to track all these hours you were doing stuff in your home when kids were not there. If you are open or will be open for 12 months this year, then what I would strongly recommend is pick 2 months to carefully track these additional extra hours when kids are not there. So you might pick August and October. I don't know. And for August and October, you want to write down on a calendar all the different things you are doing when kids are not there. Kids arrive at 6 in the morning, so you write down 5:30 a.m. to 6 a.m. cleaning. You do it carefully for 2 months, and then use the average for those 2 months for the rest of the year. And if you can say that the work you did in those 2 months was typical of the rest of the year, then that's fine. The average of those 2 months will work for the rest of the year. And every year from now on, you do 2 months of carefully tracking. All right, other questions? Oh, here I see one. Can you count the time working in the yard, cleanup, mowing, childcare area? Okay, you can only count time if you would not be doing it if you weren't in business. So, are you mowing your lawn if you're not in business? Yes. So you don't count that time. Are you shoveling snow 5 a.m. before the parents arrive? Would you be doing that if you weren't in business? Not at 5 a.m. So I would count shoveling the snow. Picking up toys in the backyard at the end of the day, yes, you would not be doing that if you weren't in business. So you can count that time as well. All right. Heidi, what else?
I'm going to go backwards just a little bit. I think we've covered a lot of the time-space questions. There were some questions about past expenses. So providers or entrepreneurs who might have purchased something in response to COVID-19, maybe they made an accommodation in their home for health and safety, or they purchased some things or spent some money. Do you think that past expenses will be included in this eligibility criteria for the stabilization grant?
I don't want to guess because each state can decide. Some states could say, yes, you can count all that stuff going back to January, let's say. Some states may say, oh, you can only go back to March. Some states may say earlier. We don't know. I can't guess. 50 states, territories, tribes, they could make their own decision about this. So just pay attention to what the application says. And as I'm going to say later, you still want to keep receipts for all this stuff. You can still deduct all these things, regardless of whether or not they count as an expense for the grant.
Tom, there are a couple other questions about health insurance and paying for premiums. And even if they're using something on the open market in their state, territory, or tribe, can they use the grant to pay for health insurance?
We don't know. The grant guidance indicates that states do have that leeway to allow that expense. But this is a little tricky. So here's a tricky one. You're paying health insurance premiums through the marketplace, right? They're not a business deduction. They're a personal expense. Your state may allow you to use the grant money for these health insurance premiums. Great. They're not a business expense, however. So if going back to my first example of $5,000 pay yourself, you're using some of that money for the insurance premiums, but they're still taxed. They still come out to you as taxable income, even though you can reimburse yourself, if you will, for these health insurance premiums. Boy, that gets tricky. All right.
I like to ask you the hard questions. Here's my last question. I'm going to let you go back to your presentation. Right. There's a couple of folks who are thinking about their income level may increase because they receive this grant. What advice would you give a family child care entrepreneur who may be eligible for benefits right now? Maybe their kids or members of their family are eligible for health insurance or some other benefits because of the income level of the parent. What advice or what things would you help them think through?
So, as I said, I gave a couple examples of where it's possible that getting grant money might make you ineligible for health insurance credit or college scholarship, or may reduce the benefit that you were getting somewhere else. So what do I suggest? I would take a look. I would compare. I'd say, okay, I'm going to use an example. Currently, I'm saving $3,000 a year because I'm getting this healthcare credit, tax credit. I'm saving $3,000 a year. How much am I getting as a grant? I'm getting $5,000 as a grant, and I'm using it all to pay myself. I'm paying some taxes on that, so I'm left over with $3,500. So in that example, I'm still better off getting the grant, even though I'm going to lose the healthcare credit. Or I'm getting the $3,000 health credit, but I'm only benefiting $2,000. I'm only getting $2,000 benefit from the grant. Maybe I don't want to get the grant. My sense is, however, that the amount of these grants is going to be in the thousands and thousands and thousands of dollars. And I think in many cases, you're still going to be better off taking the grant. Now, if this is not real clear to you, I would suggest talking to your tax preparer. This is a good question for your tax preparer because they've looked at your tax return. So you can say to them, look, if 2021, if I'm adding X dollars as income from this grant, and I'm losing something over here, how does that come out in the end? Which way do I come out better? And your tax preparer should be able to answer that question. All right, let us go on. So, more on question 3 about your spending money with this grant for both business and personal stuff. Now, in my earlier example, it was like we had to spend $16,000 at a 30% time space to be able to use $5,000 on a grant. And you might get more than $5,000 on the grant. And you may be spending, you're spending it on these shared items. You may not be able to spend $16,000 or more on other stuff in order to be able to use the grant money on shared expenses. So here's an example. Instead of spending $16,000, you don't have $16,000 to spend, or there's not enough stuff to spend $16,000 on. Instead, you're spending $10,000 on these shared items, and you're in a 30% time space. So you're able to show for the grant that you spent $3,000 on shared items that are business, the business portion, and you got $5,000, and you're paying yourself the remaining $2,000. You got $5,000. We're showing $3,000 of stuff for your business and $2,000 for yourself. What's the tax consequence? Again, you're showing $5,000 of income minus these $3,000 of business expenses. That means you got $2,000 of taxable income. You're paying between $600 and $800 of taxes on that money, and you're going to have, roughly speaking, $1,200 to $1,400 left over in your pocket. Last example. You're already spending a bunch of money on household stuff. So what if you apply the grant money to stuff you're already spending money on? You're not spending extra money. You're able to spend some of this grant money on utilities, on rent, house insurance, kitchen supplies, cleaning supplies. You're not spending any more money. You're just your normal spending. And now you're saying, I'm applying this spending to the grant money. You have the same deductions before you got the grant as after you got the grant, because you don't have any additional deductions, right? You're still deducting the stuff. So $5,000, you still got the $5,000 grant, taxable income. You're always showing that on your tax return. You're going to pay taxes on that, and you're going to still have $3,000 to $3,500 left in your pocket, just like example 1. You're still able to deduct the stuff on your tax return, but that hasn't changed before you got the grant or after you got the grant. So it's essentially like paying yourself, except you're just able to identify expenses you already have or are still having, and those are eligible to get money from the grant. All right, so how do we make sense of all this? And I know these examples can be probably hard to digest initially, because it took me a while to think this through for all those examples. Remember, you're going to be able to get a copy of these slides when we post the Q&A in an article on my website and other resource sites that we'll show you at the end of this webinar. So, what is better financially, paying yourself or buying stuff? As a review, if you pay yourself all of the money, you're going to pay taxes on the full amount. $5,000 in our example. We're not claiming any business expenses for the grant. We didn't go out and buy more stuff, so it's taxable income. And you're going to have, roughly speaking, $3,500 or something in your pocket after the taxes. Okay. What's the impact of spending some of it? Let's say you're spending $1,000 of that on something for your business. Well, how much you're going to have left in your pocket at the end of the day? $2,800. Where does that come from? $5,000 of income. Now you have new $1,000 worth of deductions. Now your taxable income is $4,000. and the taxes on $4,000 at the 30% rate. This is an example. Your tax rate could obviously be very different, but roughly speaking, 30%, you're going to owe about $1,200 in taxes. So you're going to have about $2,800 left over. If you spend all of it on your business, you're not going to pay any taxes. $5,000 of income minus $5,000 of new business expenses, zero taxable income, but you'll have zero left in your pocket after taxes. So the more money you spend on stuff for your business, new spending, the less you're going to have in your pocket after taxes. Well, how do we make sense of this? Now, if you need to buy stuff with this money, do it. I mean, this is a fantastic opportunity. You're going to get, likely, a bunch of money. And this may be the opportunity for you to buy the stuff that you've always been wanting to buy to improve the quality of your program, to make it easier for you to run your business. You're going to buy a new computer or whatever. Okay, great. Then I'm not saying don't do that. I'm just saying if you need to, if this is important, if it'll help your business, great. Go ahead and buy it. But don't spend this grant money just because you have money to spend, right? Don't look at this and say, oh man, I'm getting $5,000. What can I buy? Let me look around. Don't just buy something because you feel like buying something. You know, there's a difference here. I need it. It's going to improve my business. Okay, great. But I just want, now's the time to go shopping. Let's go shopping. Let's see what's out there. No. It's always financially better off not to spend money on your business than to spend money on your business. And the previous slide gave you that example. The more you spend on your business, the less you're going to have after taxes. So, again, I've said this before, if you spend some or all of the money on yourself, once you do that, you can then do whatever you want with that money. Build a fence, make a home improvement, and then deduct it. Now, home improvement. You can't use the grant money directly for a home improvement. You want to remodel your kitchen, all right? You want to spend, $8,000 remodeling your kitchen. You can't use the grant money directly for that. But if you take the grant money for yourself, $5,000, I'm just using that as an example. I hope people don't take that to mean everybody's going to get $5,000. No. So you take the $5,000 paying yourself, all right? Grant money said, okay, great, you can do that. Now you got $5,000. Now you can turn around and put the $5,000 towards remodeling your kitchen that was not allowed directly with grant money, but is allowed indirectly. Or you can buy personal stuff, buy clothes, take a vacation. Put money aside for your retirement. That would be a good one. In the grant application, we got Heidi. Let's go.
I'm coming back because there are a bunch of questions about that last point that you just threw in there. I'm wondering if you could talk about investments in retirement, because we're seeing a lot of questions about if I'm a provider who takes the grant and I pay myself, is the recommendation to then put that away for savings for retirement? Can you talk a little bit about that?
Yeah, I want to go back. I'm trying to find that previous slide here. Hold on a second. Where did it go? Okay, here we go. So, I'm sorry, Heidi, you talked about retirement. Can you say that question again? Sorry.
Sure, no problem. There are a couple of questions, so I'm just kind of summarizing what I'm hearing on the questions is people are asking if they pay themselves out of the grant, should they then invest that into retirement, or can they take the grant and directly put it into retirement? Could you just maybe talk a little bit about what you think?
So I've written a whole book on money management and retirement planning for family child care providers. And most I do a whole webinars and other stuff on this. I write a lot about this on my website. So as I get older, I get more and more interested in retirement and saving for retirement. And most providers aren't saving much, if anything, for their retirement. And that's a problem. So I like the idea, if you're going to use some of the grant money for yourself, to then put money in retirement. However, it's not that simple, because there are other financial issues that you need to deal with before you just turn around and put money in retirement. Do you have an emergency fund? Are you saving enough to pay cash for a car? Are you paying off your credit cards in full at the end of each month? And so on. Are you taking care of other more immediate financial concerns? Now, okay, maybe you're not doing everything you should for immediate stuff. I don't think you should delay saving something for retirement. So, yes, you should be doing that. But you cannot use the grant money directly for retirement. Right. And I'm talking about if you're self-employed now, the grant application is not going to say retirement, but taking the money for yourself and then putting it into retirement, I like it. That may not be exactly what every provider wants to do. Okay, does that help? Heidi, are you there? There you are.
Yes, I think so. There's no immediate responses, so I think you can go to your next slide, and I'll just watch the questions roll in here.
Okay. All right. So a little more, something more about tax planning here. If you do decide to pay yourself with some or all the grant money, you're still going to pay more in taxes. But again, do not freak out. Do not turn it down. Do not reject money simply because you're going to have to pay taxes on. If you won the lottery, you'd have to pay taxes on that, and you certainly want to win the lottery. Okay. Now, if you are paying yourself with some of the money, all right, you're going to have to pay some taxes, some extra taxes. And you may want to, I would urge you to plan ahead and think about that, so that when tax time comes, you don't say, oh my gosh, I'm paying more in taxes. I'm paying that $1,200 in taxes, and I didn't save for that, or I don't have that now. So what do you want to do? If you know that you're going to save, if you know you're going to use some of that money to pay yourself, you may want to plan ahead by saying, oh, I need to increase estimated tax payments if you're paying estimated taxes quarterly. Or if you're married, you may want your spouse to set aside a little bit more out of his or her paycheck to cover some of those taxes. So we've been talking about being in a 30 to 40% tax rate, federal and state taxes. You may also want to up your withholding for state income tax purposes, or if you're filing quarterly estimated taxes for your state as well. Now, I've been using 30 to 40% as an example of what you might be paying taxes on. Now, it's possible that your tax rate will be below 30%, because hopefully I've been telling you this is rough. So your family circumstances may be a little bit different. You're always, however, going to owe at least 15% tax, Social Security, Medicare tax, on money you pay yourself. You may, however, owe little or maybe no federal or state income tax, depending on your circumstances. You may have a lot of kids of your own at home. You may have a lot of medical expenses. You may have other circumstances. Maybe you're not earning that much money. And I know many providers who owe very little in federal or state income tax, but you're still always going to owe that 15% Social Security tax. So, at a minimum, you would want to set aside at least 15% of money you pay yourself for additional taxes. Now, again, if you're self-employed, I don't know if you can see this as it's kind of small, but if you're self-employed, you're filling out this Schedule C, profit or loss for business. And the money you get from the grant could either be put on line 1, where it says gross receipts. Just went to the eye doctor so I can read that now. Gross receipts, along with parent income, subsidy money, okay? Or you could put it on line 6, other income. Other income. If you get a 1099 from your state, then I would suggest putting that amount on line 6, other income. There's no rule that requires you to put it on line 1 or line 6, but if it's a 1099, definitely put it on line 6, or if you want to put your grant income on line 6, that's fine. Line 6 and line 1 get added together, so your gross income is line 7. Line 7. So states might ask on applications, I don't know, what is your gross income for last year? That's where you'll find it, line 7 on this Schedule C. Now, part 2, and I know you can't read all the details, but this is where you start showing all your other expenses. Advertising, supplies, office expenses, and so on. Now, if you're not sure when this application asks for expenses and lists certain kinds of things, and you're not sure, where's that coming from, you could always try to refer back to this Schedule C to see what you listed last year as expenses under these various categories. The expenses on your house, utilities, rent, which are going to be the two, and repairs, which are going to be the expenses that could well be eligible for this grant money. That will appear in that Form 8829. The total expenses from Form 8829 are going to show up here on line 28 as an additional expense. And then the bottom line on this form, line 31, represents your net income or profit. Means the same thing. So if your grant application might ask you for net income or profit last year, that's where this is going to show up. And your application may ask you for average monthly expenses. So I want to say something about that. I jumped it. I'll get to that in a couple more slides. Before I get to that, most providers, in my experience, pay too much in taxes because they're not keeping track of all the expenses that they're entitled to deduct. They're not doing that because in some cases they don't realize they can deduct it, or they're not keeping receipts for these things. And because in many cases these expenses would be allowed through this stabilization grant, we want to make sure you understand the comprehensive nature of what you're entitled to deduct. You are entitled to deduct an expense that is considered ordinary and necessary for your business. Ordinary and necessary means something that's typical, helpful, appropriate, useful, or common in your business. And what is your business? Your business is providing a home learning environment for children. Talking about people now, you're doing childcare out of your home. So therefore, you can deduct probably just about everything having to do with maintaining or cleaning or repairing your home. What are we talking about? Virtually every household expense. Pots and pans, furniture, appliances, pictures on the wall, bedding. Are kids taking a nap on the bed? You can deduct the bed, the blanket, the sheets, the pillow, the pillowcase. Lawnmower, gas for the lawnmower, repairing the lawnmower, garden hose, new windows, a deck, carpeting. Not all of these might be directly eligible for the grant, but they're deductible. And if you're paying yourself, you can also use it now for these items as well. So, it's easier to think about what's not deductible. You can't deduct your clothing because you could wear that clothing outside of your home, so it's not a uniform, it's not deductible. Your hairspray, no. Your toothpaste, no. Your motorcycle, no. The books you read at night that have nothing to do with childcare, no. Kids don't sleep on your bed. Well, you can't deduct it now, right? So, time to have kids start sleeping on your bed. Whoops. I think I missed one. Okay. Yes, here we go. Because you can probably deduct just about anything associated with your home, you want to save receipts for everything. Before the grant, before stabilization, before we ever heard about that, before the pandemic, look, you want to save receipts for everything. I think it's easier to save receipts for everything you buy, rather than deciding at the time you buy something, oh, is this deductible? Oh, I'm not sure. I don't know. No. Why? Tomorrow you go out and buy a toy for your child. And your child takes the toy and brings it into his room and the kids never touch it. You can't deduct that. It's personal. But in November, he takes the toy out of his room and allows the other kids to play with the toy. Now you can deduct part of the cost of the toy. Did you save the receipt for it back in June? Maybe, maybe not. For every $100 of a receipt that you have for something that's used exclusively in your business, you're going to save about $30 to $40 in taxes. So you just got home and spent $100 on some children's furniture, children's stuff. But the receipt fell out of the bag and now it's somewhere in your car. Is it worth your time and energy to go back to your car and try to dig out that $100 receipt? Yeah, I think so, because you're going to save about $30 to $40 on your taxes. You're going to earn more per hour doing record keeping than you're earning per hour caring for children. And when you apply for these grants, and you're going to say that you're spending some of this grant money on operating expenses, which can include a whole ton of everything we've been talking about, they may well require you to show the receipt or send them the receipt. If you're being asked to send the state or somebody else a receipt, never send the original unless you're required to send the original, because you don't want to get things lost in the mail. So if you're going to send them a receipt, send them a copy of the receipt, keep the original. If they want the original, make a copy of the original and send them the original. You always want to maintain at least a copy of the receipt. How long do you need to save all these records? At least 3 years. The state, the federal government, the IRS, requires you to save receipts for at least 3 years. If you have employees, you're supposed to save those records for 4 years. Your state Department of Taxes may require you to save receipts longer than 3 years. But there is no 7-year rule, and I keep hearing about all the time. Oh, I got to save my receipts for 7 years. Nope, 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 you do not. I would save them for 4 years just to be on the safe side, but it's not a requirement. So, Heidi, what do we got?
Tom, there are a couple of questions about, again, sort of the goods and services category. Any of the things that you're paying regularly to operate your business, does that include things like lawn cutting services or a cleaning service? Could you talk about that as potentially eligible expenses here?
So I want to make a distinction between what you can deduct and what you may or may not be able to use the grant money for, okay? Because that's important. So can you deduct house cleaning service, lawn mowing service, gardening service? Yes, you can deduct the business portion of that, apply your time space percent as a general rule. Those things are always deductible. Can you use house cleaning, lawn mowing service as an expense for the grant? Maybe. Because, again, I don't want to tell you that you can when your state might say, we are going to restrict spending for these categories only. And so even though the state is allowed to allow lawn mowing expenses and cleaning services, which I would consider general operating expenses, to me, that's a general operating expense. But your state may say, nope, no general operating expenses. Or it's possible, although who knows, no lawn mowing services. I don't think they're going to say that, but I can't tell you for sure what they're going to say. And I know people want to know. People want to know. And you're just going to have to look closely at the application form. Now, I anticipate that what's going to happen is states are going to slowly, a few have started now, and they're going to slowly start rolling it out. So next month we might hear from one state, and October we hear from another state. So it's going to come out slowly. And providers are going to hear about what's happening in other states, right? Oh, in Maryland, we can do this. And so people are, oh, well, then can I do that in my state? Well, maybe not. So just because one state says do it this way doesn't mean another state's going to say do it the same way. The application form can look different. It's quite likely that it'll look different from state to state. And so what I'm sure this is what's going to happen. I'm going to start getting a lot of questions, email on Facebook saying, oh, can I do this? And I'm going to say, I don't know. Check your state. Find out from your state. Try to get clarification from your state. Now, there's some good news here also. A bunch of this money is given to states to help providers through this process. And the guidance has gone out of the way to encourage states to provide this assistance in many different ways. In terms of having some, hotline, websites, online Q&As, etc. And the intent is to try to provide a lot of technical assistance to help providers through the application process. Now, I know that in the past, when states have given out grants, state grants, not having to do with this, state grants, that sometimes they provided no help in determining, well, what does general operating expenses mean? Or what does this mean? And they ask me, and I go, I don't know. And show me what it says. And I look at it and say, I don't know. My advice would be, yeah, I think you can, but I don't know. You need to find out from the state. And sometimes they didn't get an answer from the state. And that could be very frustrating. I think that's not going to be as much of a problem this time around, because I think the states are going to put a bunch of resources into, if not making the application clear, trying to be able to answer those questions as they come up later. What else?
Tom, I think that we've gotten most of the questions, so I'm going to let you close it up and keep moving here. So I'm going to take myself off camera.
All right. So somebody's asking, does a grant amount money vary by state? Yes, it certainly does. And I gave you a link at the very beginning of this webinar that will show for every state how much they're getting. And I looked at that, and I didn't try to follow up on finding out exactly what formula they used, but I assumed it was going to be simply by population, but it's not. And I don't know if it's by number of licensed programs. I don't know how they made the allocation, but it's a lot of money. And it's each state, it's all over the place. California is getting more money than Mississippi. Whoop.
One last
California is
question. One
Yep.
last question is, Tom, where do you think people should be looking for notifications about the applications in their state, territory, or tribe? Who should they expect it from?
Yeah, that's a good one. Short answer, we don't know. Either the state itself, your child care, whatever the state child care agency is called in your state, they could be directly administrating these grants. Or they could designate a different organization to administer the grants. They could give this authority to the Child Care Resource and Referral Network, and they would be the ones sending out the application forms and processing the applications. So the state or some designated other agency organization. That can, again, sorry, that varies by state. How do you find out? How do you keep on top of this? One, ask your licensor, hey, are you going to inform us when you hear about this? Two, check in with your child care resource and referral agency. They're likely, very likely, to be either sending out emails or posting information on their website. I would check with them. Or three, your state child care agency. They've got a website. They're going to be announcing it for sure on their website. I would think child care resource and referral would be the ones that would be alert to this and would be announcing, giving out news about this. If you're in a state that has a child care union, your union would certainly be on top of this, and they would, I'm sure, be sending out announcements about this. So I think you can feel pretty confident that you'll get a notice about this. You will be informed. And I know this is going to be, can be frustrating because there are a couple states that are administrating money now, and your state may or may not be administrating this for the next month, 2 months, 6 months, or longer. And it's like, wow, everybody else is getting money, but my state's not. States are trying to be deliberate about this. This is a lot of money. So they don't want to rush into this and make mistakes on how this gets administered and people get confused. So they're trying to think through this carefully. They're also trying to think, what's the best use of this money? How should we best distribute it? And that's why they're making their own decisions about, well, yes, these people, we're going to give it this way. We're going to give something to everybody. We're going to divide it up according to how long you've been in business. I don't know what. So states are trying to be thoughtful about that, and that takes some time. And so people just have to be patient about this. All right. People have asked also, are they only going to give money to providers who have a higher QRIS or parent-aware rating? Are they going to limit it to people who are just caring for subsidized children? We don't know. We don't know. I doubt that they're going to exclude huge chunks of the population, right? I doubt very much that the vast majority of family child care providers won't be eligible. I think it's highly likely that the vast majority of you will be eligible for some grant. All right. And I'm just scrolling here. Can the application form come from the Child Care Network? It might. It might. So that's why you want to sort of watch them. And you're just going to have to wait to hear the word that these applications are now open. And they should be at the same time saying, here's where you go if you have questions. Or I've seen on the couple states that are open now, they already have a Q&A that answers a lot of questions. Here's on the screen now. You can also go here. Here's the memorandum. Here's the 28-page guidance. If you want to see all the general rules surrounding this money, and how it can be used that's come from the federal government. Here's a link to that site if you want to read the whole thing. I've also shown the same link on the article I posted on my website last week. The Office of Child Care may issue new guidance, and they may post frequently asked questions. That's another place you can go. And I'm certainly going to post anytime I see any new guidance or any additional information that can be helpful in answering some of these questions. I will certainly be posting it on my website. And again, your state, you got to go pay attention to your state, not other states. So I think that's going to be, again, it's going to be frustrating. Hey, this other state, we got, this provider across the state lines got $20,000 and I'm only getting $10,000. What's the deal? And it has to do with how much money each state got and what decisions they went through in terms of how they're going to decide to allocate it. There's no national rule that says everybody's going to get this or everybody's going to get this money based on these criteria. There's no federal criteria that every state has to follow. So every provider's not getting the same amount. And what's the deadline for the states to start distributing it? September of 2022. So a year and 2 months from now. I hope not, but a state could wait a year from now before they start distributing the money. But they have to have allocated it by September of 2023. So I'm assuming states aren't going to wait a year from now before they start giving it out. Question, how do you go about paying yourself? Do you need a separate bank account? Well, I try to indicate how states may ask you to show that information, and they may by saying, write a check to yourself or transfer money from one bank account to another. But I don't know. I don't know how they're going to ask that for proof. Or just say, if you get $5,000 from the state and you put it in your personal checking account, and that's the account you use for business as well, and you just say that $5,000 is personal, is for my paying yourself, is that good enough? I don't know. I wish I could tell you. The state will hopefully give you guidance on that. All right. Still, how do we find out which states have started now? Well, I listed two on my website, Delaware and Connecticut. And I've heard people telling me, oh, I'm here, this state's going to start in this time, but I don't want to share information that I've heard unless I know it's already happened. So if you know that your state, or if you know for sure that some other state besides Connecticut or Delaware has started the application process, let me know. Send me an email, send me a link to it, so then I can share it with other people who may be in those states and are not yet aware of it. Also, I don't think providers should worry about running out of money, that the state would run out of money, or that you have to. This is not like a gold rush that you have to show up on the first day. This is not like the SBA Paycheck Protection Program, where they ran out of money in a few months, and providers were left out of the loop, like, oh, I didn't know about it, and it was too late. I don't think that's going to happen, because states are not just going to give away money first come, first serve. They're going to say, you're only going to be eligible for a certain amount of money, and they're going to make sure that providers in general are going to have access to this. So I wouldn't panic about, oh, I missed, the application came alive last night, and am I going to be too late? No, you're not going to be too late. So if you see a state website that says, yeah, stabilization grant, let me know. Now, one other thing I didn't say before. Patty at the beginning indicated that were several other federal programs of grant money that came down the pike over the last year or so. And there certainly can be some confusion, because I've already seen it, where providers will say, well, I got some money under this state, whatever, rejuvenation grant. Is that stabilization money? And states may use different words to describe this program. So they may come out with the Missouri Get Back on Your Feet grant, okay? And you might say, well, what is that? Is that child care stabilization? Because the states still may be giving out money that they have that aren't stabilization. So it's always appropriate to look closely and ask to the state people, is this child care stabilization grants? And if you're looking for a child care stabilization grant, is this what that is? Because if they say no, then you say, oh, okay, well, the stabilization grants are still coming down the road. This is something else. And you should always apply for the something else. If there's some new other grant, the Get Back on Your Feet grant, you want that. And it's not going to disqualify you from getting the stabilization grant. So you're getting 2 grants. Terrific. You're getting 3 grants. Take it all. More money is better than less money. Okay, Heidi, we're still not done here.
Well, this is the last question. This is the very last thing I'm going to ask you to talk about, and then we'll turn it back to Patty after you answer. And that is just your capstone statement, Tom. Why should family child care owners, operators, entrepreneurs take advantage of the child care stabilization grants? Just that last kind of message about why this is important, and then we'll end our presentation.
Well, here it is. The stabilization grants are a tremendous benefit. This is a fantastic thing. This is the best news for family child care providers in decades. Grants, not loans. All right? They're going to help you stay in business, help you improve the quality of your program, get you through rough patches. You've taken on debt, and now this is money that can help you survive. You still aren't back to full enrollment, so this can help keep you going. I've talked to lots of providers who've just been in terrible financial strain. This is great news. It may not be available to you today or next month or the month after that, but help is on the way. So don't hesitate. When these grants come down, apply for them. If you are considering, I've had providers say to me, I'm considering applying for this SBA loan, this EIDL loan. It's a 30-year loan. You pay 3.75% interest because they need some money. And so they're looking for loans. Well, okay, maybe that's a good thing, but these grants are better than a loan, right? Because you don't have to pay these back. So lastly, here's my contact information again. Here's my email address. Don't hesitate to send me an email. I'm happy to try to answer email questions. My website, Tom Copeland blog, you can post questions there. And that's where I'll be posting a link to this recording, a copy of the PowerPoint slides, and any Q&A. Facebook, I'm on Facebook. You can ask me questions on Facebook. Every time I update, write new articles, it will show up on Facebook. A lot of providers pay attention to Facebook. So I appreciate what people do. You work extremely hard. You put in long hours. And so we're trying through the stabilization program to help financially, and hopefully you understand that even if you are going to pay some additional taxes on this money, perhaps, you're still okay. You're still better off. Don't let anybody tell you differently. Don't let another provider, do not let a tax preparer say, oh, don't get these grants. Last comment about this, because I hear this sometimes, oh, I don't want this grant. because if I take the money, it will kick me into a higher tax bracket. Instead of paying 30% tax, I'm going to pay 40% tax. Oh, so therefore I don't want the money. No. If this grant money kicks you into a higher tax bracket, that only means that the money from the 30% to the 40% rate is taxed at the higher rate. All of the other income that you make or your spouse makes will still be taxed in the same way. It's not going to increase your taxes on other money. It only means you're going to pay a little more tax on the grant money, but you'll still have money left over. All right. Somebody says, will we get contact hours for this training? That's a decision at your local level, at your licensor level, whether they will give you credit, contact hours, whatever, for this webinar. All right. So that's it. Patty, I'm on to you.
Hey. Okay, thanks, Tom. There were a number of questions that were asked throughout Tom's wonderful presentation about how do I know if my grant has been my grant application has been released yet? Where do I go to find information? Some of you are taking advantage of now or have applied for additional grants. So I want to just show you where you can find out in particular about your stabilization grant. And so additionally, I want you to know that the webinar will be made available with the recording. All of the links will be made available. Folks are broadcasting the links to you now too. If you want the links, you can email us with any questions after the webinar. So one of the easiest places to go to find out if your state has release their child care stabilization grant application is childcare.gov. And so that's a really easy URL to remember, childcare.gov. Once you're there, you'll see COVID-19 resources. And so you navigate to the COVID-19 resource page. You'll see two big buttons, one that says families and one that says child care providers. You click on the one that says child care providers, and that will take you to a listing of all states and territories. You'll find a variety of things there that will be of use to you, including your licensing agency, other COVID-19 resources, and you will see a row that has child care stabilization grant applications. And the slide that we're showing you is Connecticut, because Connecticut has Connecticut there. Connecticut is one of the states that has released their applications already. So you see the link there and you just click on the link and it will take you right to your state's application page. Tom mentioned about the support that's available for family child care providers at the state, tribal, and territory level. Please make sure also you look for the information here about any business supports and resources that are available to help you. We gave you our email address and somebody else will pop it into the chat so that you, if you can't find who to talk to get help, you can email us and we'll try to get you to the right person in your state, territory, or tribe. Again, states, our territories and tribes are planning now to release their applications. We wanted to prepare you so you would have what you needed and be ready to apply when those become available. So if you'll go to the next slide too, there's also a child care stabilization grant information page that's available through the Office of Child Care, Early Childhood Training and Technical Assistance System, which, as I mentioned, we're a national center, the Early Childhood Quality Assurance Center. If you go to this page, there's a special button for providers where this webinar will be posted, and as we get additional information for you, we'll be posting that information there. Again, what we shared with you today is federal guidance. State, territories, and tribes have the ability to make their applications very unique for your area where you live. Make sure that you're in contact with, as Tom said, and that you're listening for the release of stabilization grants. And that you're prepared when they come, because we want you to succeed. Family, we can't do without family child care. You're a vital part of the child care market, and certainly the unsung heroes during this pandemic. And so with that, what I'd like to do before we bring Heidi and Tom back up for some final words is, again, share with you. These are the links for all of the resources that we talked about, and also where you can go to Tom's site as well. I'd like, if you would, to bring up the poll, please, so that we can just get a sense of how we did today. How much has your understanding or awareness of the American Rescue Plan Act stabilization grant funding improved? Did it not improve? Is it a little improved? Is it kind of improved? Or is it significantly improved? And again, just click right on to the slide to answer that question. And we just have two more very short questions, and then we'll pull Tom and Heidi back up for final words. Okay, great. Let's go to the next poll, please. How much was your understanding or awareness of preparation strategies to actually apply for a stabilization grant improved? Not, a little, kind of, moderately, or a lot? And again, as Tom said, we know that you'll have questions, and we know due to the historic nature of the funding that there may be confusion because there's other sources of support out there for you. Just know that in your state, territory, or tribe, there are people who can help you. You can always contact us. Tom and Heidi are also available to answer questions. So we want you to get the answers that you need so that you feel comfortable applying. And then last but not least, how likely will you use at least one of the strategies mentioned on the call today? Definitely, you'll consider, probably not, or you won't. And while folks are answering that, Tom, I'll just say folks are commenting about how wonderful this information was and how grateful they are for sharing your expertise with us, and Heidi, you as well. And so if you'd like to pop them back up, Max, we'll hear from them. Tom, anything else? Okay.
Yeah, so take the money. Somebody's going to give you money. You will get money, and you want to take it. That's what I want to say. Okay?
Heidi?
Short and sweet. I love it, Tom. I will just say a longer version of that is that in my entire career, I have never seen a child care investment like this. It is for you. You should not let it slip past your fingers. This is not something where you're competing against every other small business in the world. This is an investment made because especially family child care, was asked to stay open. You responded. You cared for kids in your own home, taking on risk and to your business, to your health, to your family, to your home in so many ways. You answered the call of governors and legislators and the entire administration of this country. You stayed open, and they have made this investment to make sure that you can recoup some of the instability that was caused because of the pandemic. And so please do not let this go past you. We have never seen anything like it. You absolutely need to apply. Ask questions. I know sometimes this can feel overwhelming. It can feel confusing. Find that trusted local partner, whether that's your CCR&R or some other network or advisor or trusted resource, your licensor, whoever that is for you. Ask questions, ask for a translation when you need it, ask for clarification, ask for help to write a successful application. This is meant for you. So don't let it slide past without grabbing onto it. It's for you. You need to take advantage of it.
Yeah. Thank you both so much for sharing your time and your expertise. And to the family child care providers with us on the line, thank you for all you do every single day. And with that, have a great Saturday afternoon, everybody. Thank you.